this is how I make almost $500 per day using ICT Power of 3. In my last two educational videos, I have taught you how to trade ICT Power of 3 on high time frames like the 15-minute time frame, the 1-hour time frame, and the 4-hour time frame. But in this video, I'm going to teach you a simple Power of 3 strategy that you can use on the 1-minute time frame. We will be taking our entries on the 1-minute time frame, and I call this model one shot, one kill. So it's one shot, one kill, or you could say OSOK model, right? It's basically identifying your intraday bias on the 1-hour time frame and then taking your entries on the 1-minute time frame, right? This is literally the best trading strategy, one of the best. I wouldn't say the best, but like one of the best strategies, Power of 3 strategies that you can use right now. All right, and I'm currently on a break in my Discord, but starting from January, I'm gonna be live trading once again in my Discord server using this strategy and my other models. So if you're interested, there's a link down in the description. Click on it, and you can get access to it. So, what exactly is the strategy? So on the 1-hour time frame, first of all, we have to identify our bias, right? And we only need 2 candles to identify our bias, right? The 2 1-hour candles. So let's say that this is the 1-hour candle, right? And it has a wick like that, and it has a wick down there. Now, this is the first candle, right? Now we need another candle to identify our bias, right? And this is the 1-hour time frame. So let's say the next candle closes above it, right? So the next 1-hour candle, what it does, it closes above it. So when we have this scenario where the second candle closes above the high of the first candle, the bias for the next candle that opens right here is going to be bullish. Why? Because we closed above the high over here. So when we have a closure above this level, our bias is going to be bullish for the third candle. But if we opened here on the second candle, we went up, but then we had a closure below, but we had a wick to the upside. Let me explain in a minute what I mean by this. So instead of closing above the high of the first candle, which is right here, the second candle wicked above it and then closed below it. Now, the bias for the third candle that opens, for example, right here, is going to be bearish, right? So our bias is going to be bearish. The first target would be this, and then the last target could be this level over here, right? So this is how we use 2 candles to identify our bias for the third candle right here. Now the question arises, how do you actually trade? How do you actually trade, right? Because this right here is on the 1-hour time frame. So when the third candle opens, so let's say the third candle opens right here, right? This is the opening price. This is where the third candle opens. You have to drop down to 1-minute time frame, right? You drop down to 1-minute time frame, and this is the opening price. Remember that right here. Okay. Look to the left of it, and you will see old liquidity levels, right? So we're gonna have equal highs or significant high, right? And let's say that. Just bear with me here. Just bear with me here. I'm going to teach everything. Just be patient. So this is the opening price of the third candle. And so we have to look for liquidity to the left side of the third candle's opening price, right? Since our bias is bearish, why? Because we failed to close above this high. So our bias is towards this low and this low over here. Now, what I want to see on the 1-minute time frame is price go up, take out buy side liquidity over here on the 1-minute time frame, and then give me a market structure shift, and I'm gonna take my entry towards this high over here, this low over here, and this low over here. It is literally that simple. And you can find these Power of 3s in every single 1-hour candle. So all you really got to do is, first of all, identify your bias with the last 2 candles, right? We only use 2 candles to identify our bias. And for the third candle, On the third candle, we trade. We take our setup in the third candle. So how would this setup look like? It would look something like this. So first of all, price will go up and then go down. And that wick that we get, all right, this is getting a little messy, but yeah, the wick that we get over here is this move to the upside. We swap liquidity with this wick, and that's where you will enter, and you're going to catch the entire power of 3 move to the downside, right? This is literally the best, literally one of the best, if not the best models out there. And that is for scalping. You can basically use every single 1 hour candle to take these trades. And I'm not kidding. I'm going to show you the examples as well, and you're going to be surprised how well it works. Now, if you've watched my old video, I teach how to trade on a higher time frame. And of course, if you can't be on the charts 24/7, then that time frame is for you. But if you want to scalp and make quick money around $500 a day, now of course it would require some experience. But if you master this strategy, I promise you, literally this is how the markets move. Okay, one of the ways the market moves. And similarly, it will look like this if our bias is bullish, right? So we had this candle, price failed to close below the first candle low, and we closed around here. Now, then the third candle opens, we get a manipulation to the downside, which is this right here. If we zoom in on the 1 minute time frame, this is what it's going to look like. And then we look for a market structure shift, entry, right? This wick is where we're going to get our entry on the 1 minute time frame, and we are going to like take the entire trades towards these highs, this high and this high. Literally the best mechanical setup that you can trade. I keep saying best because it's actually very good, right? So now that we know this, and also let's say that we managed to close below, right? So let's say we closed below this low. So this is what's going to happen. All right, we can do this. Perfect. Yeah, so this is what's going to happen, right? We closed below this low. So instead of this happening, what we are looking for is a buy side liquidity sweep now, because our bias is now bearish. So what's going to happen is we have this opening price of the third candle. We push up, take out liquidity over here, get a market structure shift, and we take this entire trade, this entire expansion of this candle to the downside. Why? Because we closed below this low, the first candle low, right? This is the first candle, the second candle, and the third candle. That's where we're going to get our entry. We use these 2 candles to identify our bias. I hope that is clear. So now let me give you guys some examples. All right, so here is example 1, and this is not the cleanest examples because I want you to understand that, you know, sometimes the setups will not be very clean. And this is part of trading. This is like realistic trading that we are doing here. So look very closely. We have this first candle, the second candle, and the third candle. We're going to use the first 2 candles to identify our bias for the third candle. So this first candle, if you mark out the low here, we can see that the second candle closed below this low. So our bias for this third candle is going to be bearish. We are trying to follow the momentum, right? We're trying to catch the next candle, the next, distribution to the downside. So I will mark out the opening price of this third candle, and you can see this right here is the opening price. Now, look to the left of it. We have this short-term high over here, and equal highs you could say as well. Right? So since our bias is bearish, we have this purge right here. And as I said before, this is not the cleanest examples, right? This is not one of the cleanest examples, but right here, you can see we have a market structure shift right here. Since we are on the 1 minute, wicks are enough. We do not need a body closure. Please remember that. Now, what we have is a fair value gap right here, and also volume imbalance, right? And we can also consider this as our auto block, because that's the candle that swept the liquidity, right? So that is our auto block. So right here, you can see if you took your entry from this level, you put your stop here, you could have easily gotten like a big expansion to the downside, giving you at least 3.44. And you can basically just use standard deviation tools, projections like this that I've taught in my previous videos, and you can take your targets like around here or around here. As I said before, this is not the cleanest examples. I'm going to show you the cleanest examples in the next coming examples now. So let's move on to the next example now. All right, so this is a very, very clean example. So this is the first candle, this is the second candle. You can see that the second candle closed above the high of the first candle. So our bias for the third candle is going to be bullish. So this is one shot, one kill. We take one entry, right? We look for one candle power of 3, the 1 hour candle, and we target these highs. So I'm going to mark out the opening price of the third candle, which is right here. Let's go to the 1 minute time frame and see what happened. So since our bias is bullish, you can see this is the opening price. We are not interested in taking short positions. This is the opening price. Look to the left side of it. What do we have here? We have this high and we have these equal lows. This is what I like to see, right? A pool of liquidity over here. So we have a power of 3, or you could say manipulation to the downside. And then we have what? As I said before, I only need to see wicks, right? Bodies don't matter for this strategy. So we have a market structure shift. Now, look the precision here, guys. We have this auto block over here. Price taps into this auto block. What do we have here? We have equal highs resting. So this is how the algorithm, the market makers operate. This is your entry. This is your TP right here for 1 to 2. Let's see how this plays out. It goes up, consolidates, and then right there we have this beautiful expansion to the upside, guys. Literally, it doesn't get any easier than this. Like, a lot of people say, oh, you upload new strategy every single day. Listen, all right? All I've done this time is teach you time, price, liquidity, turtle soups, and that's it. That's all I try to teach in different variations. So if you think that this is something new, you need help because this is power of 3. That's all I'm teaching you right now in different variations. All we need is power of 3 to take our trades, right? So although it may seem new to you, but this is literally everything that I'm teaching you right now is power of 3. But just in different variations, different ways to trade because markets are not the same all the time. So you have to look for these opportunities by using different models. I hope that makes sense. So now let's move on to our last example and then I'm going to end the video. All right, guys, so here's another example, right? I want you to know that it's not going to work 100% of the time. You're not going to identify your bias 100% of the time. But I promise you, this is the easiest way to identify your bias. Literally, like look at this. We close above, the next candles are bullish, right? But then over here, of course, price has to reverse at some level, right? So basically you can see over here, it has so much hyper. You can see we failed to close below, had a push up, right? We failed to close above, we had a push to the downside, right? We closed above, the next candle was bullish. We closed above, the next candle was bullish. Then right over here, you can see we failed to close above, the next candle was bearish to the downside, right? It happens again and again and again. Look over here. We failed to close below this candle. The next candle was bullish. So I promise you, it is literally the best scalping video on YouTube, I believe. So this is the first candle. This is the second candle. This is the third candle. We failed to close above the high of the first candle. So now our bias is bearish towards this low and also towards this low. What happens if both of the liquidities are taken before our entry, right? That makes setup a low probability setup. That makes it a low probability setup. I'm not going to lie to you, right? But it still can be a winner. So I'm going to mark out the opening price. Our bias is bearish. So we're going to look for the liquidity sweep of the opposing liquidity, if that makes sense. So going to the 1 minute time frame over here, this is the opening price. What happens? Price goes up towards what? You can see we have this high over here. Short-term high. Price sweeps it. Then what do we have here? Body closure below this breaker block. And then what do we have? Retest of the breaker block. And what do we have over here? Equal lows. Do you understand what I'm teaching you right now? No one is going to teach you this for absolutely free. In my Discord server from January, I'm going to be trading this model, this exact model live. in front of hundreds of my students. I have been doing this, for the past couple of months, and we had around 85%, 80% win rate. I'm not even kidding. So this would be it, guys. I really hope you guys enjoyed this video. I hope you guys learned something. I'll see you guys in the next one. Goodbye.